Paytm is no more. As you have here, right? India's biggest fintech giant will no longer remain with us. But wait, these are not just my words. This is an official statement from the RBI.
Starting March, digital payments on Paytm will come to a halt.
India's central bank has dropped the hammer on Paytm.
रिजर्व बैंक ने पेटीएम पर कई तरह के प्रतिबंध लगाने की घोषणा की है.
The RBI has even publicly announced the date of the ban.
Now, this means that Paytm can no longer accept new deposits, credit transactions or top-ups in any accounts after February 29th.
However, explicit detail about banning have not been disclosed yet. According to the media reports, Paytm failed to comply with RBI rules and regulations. I mean, why ban? This is the only question that come to mind. And I'm sure you are also thinking about this for last 2 or 3 days. Surely all of you have used Paytm service in India at least once in your life and know about their presence. India's largest fintech company with more than 500 million active users, more than 2 billion transactions, an app in every phone, and their barcode at every kirana shop. That makes every transaction smooth and fast and last 7 years together. But why does the RBI want to shut down a billion-dollar company? Why has it come to a point where people are withdrawing money from Paytm banks instead of depositing it? Where their mistakes made that no other digital bank should repeat? Certainly, let's delve into the detail of Paytm journey and the reason behind its transformations. Paytm inception occurred at a time when internet usage in India was still in nascent stage, where people know only the name of the internet and nothing other than. That was the time when Vijay Shekhar Sharma founded the Paytm in 2010. Interestingly, you might think about him, okay, he would be graduate from elite college like Harvard or Cambridge, or maybe he IITN or IIM. But not all of this. He is an electrical engineer from Delhi University. If you are from India, then all of you know how banks are slow. Even in checking balance, you required queues for at least 1 hour. And imagine the situation 2010. The Vijay Shekhar Sharma aimed to bring about a revolution in India, one that could fulfill people's need without subjecting them to hustle of traditional bankings, such as long queue in banks. His visions aligned with that of the Prime Minister's initiative of Digital India in 2014, which aimed to provide a virtual banking solution to the masses. This idea received substantial support and sparked debate and discussion across the country. People questioned whether such a model would work in India, where mobile penetration was low and many were not well familiar with the internet, and the concept of digital banking operation is little complicated at that time. Vijay Shekhar Sharma jumped into the challenge and launched Paytm Payment Bank in 2015. Just a year after the RBI announced a plan to allow digital banks in 2014. This move was like catching a wave, responding to the growing demand for digital solution in banking. Paytm aimed to make banking easier for people who were always in their phones, providing simple, accessible banking service through mobile apps. Paytm had firmly established itself as the king of Indian finance market. Everything was good. The company was growing and earning decent amount of revenue. They issuing barcodes to its customer. He also part of India's newly FASTag system. India was experiencing a new digital era. Number of Paytm users exploded exponentially. Over 300 million Paytm wallet users by 2018. Within this, 31.5 million KYC customers and 68 million UPI transactions. Data also show by 2018 standalone revenue of Paytm was 323.54 crores, which was a 300% jump from the last year 2016 revenue. But suddenly one news was circulated in the media. Paytm was accused of violating its user secrecy, and RBI issued advisory to stop enrolling new customers on its platform. The RBI was warned about the several issues, including problem with the customer identification rules, known as KYC norms. The KYC is basically know your customers. It's like showing your ID when you want to buy something online or at a store. It is a way for companies, especially banks and financial apps like Paytm, to make sure you are who you say you are. They ask for things like your names, address, or something a photo ID to verify your identity. This helps them prevent fraud and make sure they are following the rules. So if you want to use a Paytm or want to open a new bank account, you will need to go through KYC to prove you are a real person. This was found violating by Paytm. It said Paytm has tied with its parent company 197 Communication. However, this warning considered especially Paytm's connection to the Chinese company Ant Finance Group. In 2015, a Chinese company called Ant Group invested a lot of money in 197 Communication, and that is the parent company of Paytm. By 2018, Ant Group had acquired a 10% stake in 197 Communication. This meant they had a big say in company's decision, including how it's followed rules set by regulators. This raised concern because some people worried about foreign companies having too much control over Indian companies, especially in bank field. When it comes to things like data privacy, as the Indian government started paying more attention to investment from China, this concern grew over stronger. However, in 2019, this ban was lifted and allowed Paytm to open account for their customers. Fast forward to 2022, when the RBI found discrepancies in Paytm compliance report. This led to stricter measures being imposed. Ultimately, in 2023, Paytm Payment Bank had to halt its main service due to these regulatory actions, just like in 29 February 2024. In 2022, a crucial moment unfolded in the story of Paytm and the RBI, marking a significant shift in their relationship. What began a concern about Paytm connection with Ant Group turned into more serious issue when the RBI found discrepancies in Paytm compliance report. Think of Paytm compliance report like a health checkup for a bank. They are supposed to be accurate and reliable, giving the RBI a clear picture of the bank financial health. However, in 2022, the RBI discovered inconsistency in these reports, raising concern about Paytm's adherence to rules. Just like a responsible doctor acts upon finding irregularities in a patient's vital sign, the RBI couldn't overlook these discrepancies. They had to take a stricter action to ensure Paytm followed the rules and protected its customer interest. While the exact measures taken by the RBI aren't widely known, we can imagine they might have included closer monitoring of Paytm activities, financial penalties, or limited certain operations. Eventually, this action led to shutdown of Paytm Payment Bank main service in 2023, which means this ban is not a new for Paytm, but this time considered serious action and complete shutdown. This event emphasized the importance of transparency and following rules in the financial world. The regulatory bodies like the RBI play a crucial role in safeguarding consumers and keeping the financial system stable. Paytm experience in 2022 showed that compliance isn't optional, it must for all banks. The discovery of discrepancies in 2022 had a far-reaching consequences for Paytm. It reminded to everyone that sticking to regulation isn't just a good practice, it is essential for the health of the financial system. While the exact reason for the shutdown might not be fully clear, Paytm's journey was profoundly affected by the event of the years. And lastly, for those who want to know which services will be stopping, here they are. You can read this pausing a video.